Alrighty, what's going on, guys? Edward here, back with another video or tutorial, if you want to call it. Let's talk about a little bit about market structure. This is a very important subject here, since I still see a lot of traders uh, just failing to understand the true structure, right? Where price is going in higher time frame. I know many scalpers right here probably they, they're not going to care. But trust me, if you have a clear direction, a clear bias in higher time frame, it's going to be much easier for you to scalp, right? Actually, way easier. Now, of course, just like anything else, um, you will find a lot of um, failing trades as well. It's not gonna you're not gonna be winning all the time, but it gets pretty challenging and fun to look for this type of things. Look for these formations. It's it's very fun. I'm gonna show you. I'm gonna jump on the chart, and once I explain you here the pretty much the theory, and you will see that it's actually very simple. I actually have a couple of videos based on market structure on my YouTube channel, but I feel like from time to time I need to update and just give some new, fresh lectures, if you want to call it like that. So, right here, we're gonna. I have two charts right here. Basically, I have two market structures right here. This we're gonna assume that this is on a 4-hour time frame, and this is how this same formation looks on the 5-minute time frame. This pink zone or red zone and green zone pretty much from the low to the high of this swing. What I'm trying to do here is I'm trying to mark premium and discount, right? If you don't know what premium and discount is, again, I'm going to leave a playlist right here at the top corner. That basically the whole theory here is that if you want to buy, if you're in a bullish market and you want to buy from discount. You want to wait for price to be at discount, and then you buy from there, right? You don't buy from premium. If anything, you sell from premium, right? You're supposed to be selling from premium. So if we invert this thing, basically, let's say we're trying to look for sales instead, right? So if we invert the scale, invert scale right here. So in this part right here, this would be the premium zone and this would be discount. So if you're trying to sell on a market, right, trying to continue selling, you want to sell when price pulls back and enters a premium zone. This is where you want to sell. You don't want to be selling from here, although sometimes it does drop, but that's because continuation, the pullback, the real pullback is not happening yet, right? The price just simply continues stretching for any reason. Let's say, I don't know, it's a big crash, news, or anything, anyways, that's causing the market to move pretty quick and fast and is not ready to pull back yet. So, assuming the price is actually pulling back, our job here, this is on a 4-hour, right, is to spot a fair value gap, okay, on this time frame, 4 hour. So if you look at the structure, how it looks right here, it doesn't, since I'm on the 5-minute, right, you're going to see that this 5-minute time frame, it has a lot more ups and downs, right, more structure. Right here on the 4 hour, like it would literally look something like this. On the 4 hour, you're gonna see less candles, right? In the push, in this impulse, you're gonna see less candles. Basically, right here, this premium and again discount. So, hold on, there you go. So premium, I have to click on it there. So we have premium and discount in this area. And notice that the price pulls back right here and enters this fair value gap and then pushes up. So right here, this is how it looks on the 5-minute. It's basically the same. Right? Price pulls back. Hang on. If it let me. Yeah, here we go. So it pulls back. Notice that it enters the fair value gap. And then from here, price moves to the upside. So it's our job to look for our entry model, which is the one that we're going to talk about in a little bit, right? Because how we know where to enter exactly, where to place the stop loss exactly, right? That's the most important thing as well. But understanding the structure, in theory, this is how it looks. This is how it should look right here. Now, there are other scenarios and that in which we could look some it could look something like this. Let's suppose this could be also the 5 minute time frame, right? Where you have an impulse, a correction, and then we're expecting that next impulse, right? So we pay attention to see where price is. So again, you can use the Fibonacci, you can use the Gann box, doesn't matter, just as long as you understand the 50% of this whole impulse to the upside, whereas 50% in the middle, right? So now that price is in discount, we're ready to buy. But we have to wait for our entry model, not just because it's a discount, we're going to buy right away, right? Where are we going to place the stop loss? That's the next step. So in this type of a scenario, we're going to encounter now accumulation, right? Sometimes the price will accumulate. And for this example here, in this scenario, explain I'm going to explain why this happens. Why most likely this happens, accumulation. The markets are constantly building liquidity, right? Constantly. This happens, it's happening all the time, over and over. It's either in an accumulation, it's either manipulating or distributing, okay? Just known as power of three, accumulation or accumulation, manipulation, distribution. So you can see here, after this accumulation, price will manipulate, right? And then it will distribute to the upside or to the downside, whatever the case may be. So in this particular case, it was to the upside. So also, when is this thing happening? It happens all the time. It doesn't matter the time, the hour, because it can also do this type of formations in Asian session, London session, New York session. It can happen all in every time, every hour. Now, should we be entering like that, like in every hour or any time during the day? Ideally, no. Especially if you're trading Nasdaq or futures, right? When does this? If you're trading Nasdaq or futures, the most of the times when this accumulation happens, uh, let's say I'm on the 5 minute. Let's suppose I'm on the 5 minute time frame, and New York session open right here, and then 9:30 is right here. 9:30 is stock exchange, right? 9:30 a.m. New York time. That's when the stock exchange opens. Center bottom. I'm gonna put it at the bottom. There we go. So we can see 9:30, right? So from 8 a.m. New York session opens, right? And we start accumulating. We start ranging, moving sideways. It's not moving. Why it's not moving? It's building liquidity. If it's not moving, it's just moving sideways. It's building liquidity, right? Because there's a lot of traders, retail traders, they're placing a stop loss below this low. Those who are looking for buys, they're buying right here and they place a stop loss below the low. Whenever they see a double bottom or triple bottom, they know that's a big ass support, right? And they're trying to buy. So if this is a support, they're trying to buy with the bullish engulfing candle here. They place a stop loss below the support, right? And the same happens with sellers right here. Every time you see a double top, a triple top, if you're a retail trader, what they're doing, they're selling. As soon as they see a bearish engulfing or pin bar or some sort of candle trigger, right? They're trying to look for sales, and they place a stop loss above the resistance, right? So the market makers know that. So the algorithm is set to do these formations, right? To then manipulate, right? And to then proceed to the actual direction. Hope it makes sense. So sometimes, again, depending on what is going on, what's happening, it's not going to happen exactly like this every single time at every single moment that I'm explaining you right now. But sometimes this from I'm just explaining you the actual setup, the actual momentum here. I'm gonna jump on the charts in a little bit. So accumulation, prices start accumulating from 8 a.m. It starts gathering a lot of liquidity above and below, right? So what it does at 9:30, here is where big guys comes in, right? Big manipulations start coming in. The price manipulates right here and start getting all of these stop losses out, right? After that manipulation. And then all of a sudden, price reverses really quick and provides and gives a change, what is known as change in the state of delivery, change of character based on SMC, they call it change of character. But ICT, it is a change in the state of delivery, a change of direction, right? Price is shifting, going from bearish to bullish now, right? And identifying this is the tricky part, right? Because that's your trigger. As soon as you see that change in the state of delivery happening, that's where you're supposed to be entering, right? That's where you're supposed to execute. You whether wait for retest or as soon as you get a closure above this previous high right there, the stop loss go here. You can target this highs, or go for a 1 to 2 if you want, right? So that is, in theory, that is the thing, right? This is the trigger. Now, sometimes, again, not necessarily. Sometimes the price will actually do something like this. Just continue crashing, right? So the cool part of this is if you don't have a change in the state, you don't buy, right? Now, if you got a change in the state happening, right? And you know a couple of things. First of all, oh, okay, this is when is the manipulation happening? At 9:30. Okay, we had an accumulation. Now I got a manipulation. Now I'm expecting a potential distribution to the opposite side, and we have detected a recent swing high, a recent swing point, right? So, we are also in discount. We're also tapping a 4-hour fair value gap, bullish fair value gap. So you see, you start gathering all these confluences together, and when you're ready, that change in state of delivery will be your final trigger. That's where you click right there, right? And that's where you enter, right? After gathering all of this stuff, you're noticing that there is an accumulation, there is a manipulation happening, and there's a strong displacement back up inside the range. It has to be quick. There has to be a strong formation. I mean, a strong retracement back inside, right? It cannot just be slow. Sometimes, trust me, sometimes you're going to see a very slow return, very, very slow. That's a very bad sign that the price is not ready to move up yet, and it could actually fail and just continue crashing. So it happens. It is going to happen. It's never going to be working out and just always right. But the cool thing about this is that you don't execute unless you have it. You understand what I'm saying here. Displacement up, a big momentum candle, huge volume. You got to see a big candle here breaking above a previous recent, right? The recent high that swept, right? That caused the swept of this manipulation. You wait for a candle to close. That closure needs to happen quick. When I say quick, it can be only one candle or two or probably even three candles, right? But it has to be very quick. If it dropped with three candles, it has to return pretty quick also with two or three candles. Like if it's just one candle, sometimes it's just one candle. Boy, that's a very strong reversal, right? Sign, and you can take the shot comfortably, right? Now, this doesn't mean go ahead and just risk your entire account in one single trade, right? Don't be stupid. So don't don't do that. So, anyways, hope it makes sense. This is the type of formations that if you pay close attention, you know, it will give you nice setups. Let's go ahead and jump into the charts. If you look right here in this 4-hour formation, we look at how we identify we have a recent break of a structure to the upside. Just simply see what happened in this recent swing move, right? Let's just practice this. Recent swing move, right? Just going to cover just to understand. Notice what happened right here. In this impulse, this recent swing move, right? That broke this high, right? We swept external liquidity right here, right? Now, where in this push, where do we have fair value gaps? Where can we see fair value gaps? So there are plenty, right? We have one here, we have one right here, we have one right here. But in theory, based on our theory, which of these three do we want to pay attention to? If we're trying to buy, because hell yes, I'm trying to buy here. I noticed that this was not a manipulation. The price actually broke through and it created another candle and even left a bullish fair value gap right here. So do you think this is a manipulation? It's not. This is an actual break. The price is breaking through this high. There is displacement above this high. This is one hell of a break, right? So we cannot say, oh, this is just manipulating this recent high. No, it's one hell of a break, right? Now, out of those three, the one that I probably want to take is this one. Is this one right here. Why? Because that's in discount. Remember, we buy from discount, right? And we sell from premium. So if anything, I'm gonna try. I can try. I mean, it's challenging and hard. It's very difficult, but you can actually be looking to sell. There in this recent drop, there are a couple of bearish fair value gaps that you can try and maybe look for entry models. Maybe lower time frame right here, and you can try to target discount, right, or this fair value gap right here. That could be one thing, right? You can actually do that. However, let's say, no, I don't want to go against the trend. I like, we just broke above, we swept external. Now I want to go for this internal liquidity. So internal internal liquidity is it's actually fair value gaps, right? Or actually fair value gaps internal. So price moves like that. So price goes into external liquidity, internal liquidity, external liquidity, internal liquidity. So externals are highs, recent swing highs. This is external, external. And then internal liquidity, they are fair value gaps, right? So we wait for those fair value gaps to get tapped, right? And we enter in there. So now we're expecting price to hit these lows, right? Again, you could be selling, you're in premium, you could be selling from here down to here. However, it's always more difficult to catch, because again, you're going against the trend and sometimes price probably is not ready to pull back. What could happen in this scenario is that you may think the price is now ready to pull back and get here. Probably it's not going to do it. Sometimes it just stops right there and then it goes like that, creates another high, and then probably drops later, right? And then enters the zone and then probably will do something like this. So it will take some time, right? So taking the sales right here, trying to guess that it's going to get here, it's a bit more tricky, right? Probably it's more advanced. So I don't recommend you doing that yet. And you just simply try to follow. So at this point, let's just simply wait and see if price actually going to get there. And as you can see, price is tapping, right? Now let's see, let's go back here. When it taps, right there, look at this. This is a pattern already. I'm on a 4-hour time frame. When that candle taps the fair value gap, right, we enter immediately our discount zone, right? We enter that 4-hour fair value gap. Plus, notice that we also fail to close below that low, right? There is a failure. Price did not close below. That body of the candle did not close below this low. If it would have closed, that's telling me that we're probably still expecting continuation to the downside. But because it dropped and retraced and closed above it, that's telling me that we have a potential reversal now. And now price is going to try to go higher instead. And it's telling me that this low is protected now. That low, in theory, should be protected. So I can go lower time frame, right? My job here is to find that change in the state of delivery, right? And let's see if it happened. Look at the manipulation of that recent low, right? Look at the sweep. Look at how quick. Basically here, this is a little power of 3. I don't know if you can see it, but based on this, what I was just explaining right about here, in this area, you see accumulation, manipulation, distribution. Well, notice that we have an accumulation right here, right? Probably if I go, let's see if I go 5 minutes. You see that accumulation, manipulation, and then look at how quick the price came back inside the range, right? See how quick. So you could have executed probably on the 15-minute or even on the 5-minute. It doesn't matter right here because you can see it clear. Where was the last move that from the last swing move, the last move that manipulated? Where was the last body of the candle? Right here, the opening of that candle. That is the change in the state of delivery. So what happens is when that candle closes, as you can see, when that candle closes right there, boom, that is confirming. That is my trigger. That is the confirmation. You see, I am seeing that on the 4 hour time frame, price has entered the fair value gap in higher, right? In higher time frame. We have entered that. This low is now supposed to be protected. So that's where I can actually place my stop loss. If I enter here, if I go long, I can enter right quick here. There are plenty ways of entering. You can do it like that. I'm going to target the swing. I'm going to target this swing right here, right? You can do that, or you can wait for a retest. You can actually place your buy limit order right here, right? Just wait for the retest. It's also possible, right? But as long as you understand what's just happening right here, what is just happening, right? We already saw with this what happened. So price did end up going. So it did go a little into a drawdown, but you see that it never went for this low. That was a protected low, right? That was the low of the manipulation. So let's continue. Of course, this was a swing trade, right? This would have taken a couple days to reach the target, but is the theory, right? So hope it makes sense. Right here, what I'm trying to show you is that if you understand the this structure, whenever there is a swing move and the price is pulling back, use your Fibonacci. If you don't want to use the Gann box here, you can just simply use the Fibonacci, right? Just to understand, right there. You just mark up, right? Where is the 50%? 50% line right here. Okay. Do you have a fair value gap? Can you see a higher time frame fair value gap? Not necessarily has to be the 4 hour. This can be on a 15-minute. You can actually use probably a 15-minute fair value gap and then execute on a 1 minute time frame. So it's basically the same what I'm trying to show you here, because markets are fractals. Fractals mean that what you see in higher time frame is happening in lower time frame. They are all doing the same time, the same thing all in all time frames, right? So if you understand this, it's going to be a lot easier for you to catch this next moves, right? You see that I'm not showing you here that this is going to be a huge, gigantic uh, 1 to 10, 1 to 20 risk to reward. But hey, if you think about it, and now that you understand this, you can probably go much lower time frames and try to find a very sharp, clean entry right here if you want, right? To have a better risk to reward. Probably not, I don't know if this scenario would have worked out, but let's go to the 1 minute. Yeah, I don't know. Probably here the 1 minute. It's just that I don't like how it looks, the structure on the 1 minute. I don't like it. However, with the sweep, we had a change in the state of delivery right here. So probably you see, as I'm saying, you could have entered there if you wanted and placing the stop loss below that protected swing low. But because it's the 1 minute, again, this is probably a more advanced thing. In the 1 minute, it tends to be more challenging, right? So probably for more advanced traders, more experienced traders. So that would have been a 1 to 6 risk to reward, you know. But again, I always try to look for confirmations in probably 5 minute, 15 minute, depending if I want to do a swing, right? I need to see confirmations in higher time frames, not the 1 minute. The 1 minute is good for a sniper. Now, you want to get a very sniper entry, you can do it, but they tend to fail uh, a lot of the times. So yeah, I'll be careful with that. So let me see if I can get you more examples right here. Let's see. Notice here, for example, um, again, it doesn't matter the time frame. I'm going to show you something pretty nice here. You see that price swept this recent low, right? We happen to have a manipulation here. So we have a sell side liquidity, and as soon as it sweeps, price immediately retraces back up, right? We only have one candle. So that one candle, as soon as that candle closes above this high, that confirms my entry. I can take a shot right there, right? And I can target opposite liquidity. I can target this highs. But remember, if this is happening, let's bring it out to here. There, right? Probably, can you take this type of entry? Yeah, you can. Just right there where we're actually on the 2 minute time frame. So can you take this buy? Yeah, but it would make a lot more sense and give you more probabilities, right, to win this trade. It would give you way more probabilities if there was some sort of an imbalance here, a fair value gap. So in this particular case, you can see that I'm gonna actually mark it up. I don't remember if it was this one or it was this one. Let's mark those both. I think it was that one. Yeah, because it's just I was on the 2 minute. Yeah, yeah, it was the final. So this one, price was kind of choppy here, a little choppy, but it was at the final. That one right there, you see. So that's a 4 hour. That candle right there, it went much lower, tapped the 4 hour, and it give you the reaction, right? Notice this, for example, this first 4 hour fair value gap in this drop, it did tap it, but did we reject immediately? Notice, I want you to understand this. Look how quick this happened, right? Sweep, immediate, right? Now look at this. We did sweep, but look, price gives a buy, and then a bearish, and then breaks with that one right there. That would have been the change in the state. Look, do you think that change in the state of delivery, because it is, I just want you to understand something here, because there was a change in the state of delivery also here. That's a confirmed change in the state. But I want you to understand why this failed, why this one failed, and why this one won, right? Both. This one was also tapping the 4 hour fair value gap, right? So why after this recent sweep creates this lowest point, price, look how long, how many candles it took 1, 2, 3, 4 candles for it to close above this high. Don't get me wrong, that is definitely changing the state of delivery, but it's not a good change in the state of delivery. It's not a strong, right? Because changing the state of deliveries are going to happen all the time, but do we take them all, right? That's the question. Can we actually trade every single change in the state? The answer to that is no, we should not, right? Every single change in state of delivery that pops up on your chart, you should not be taking them, right? Because just like anything else, every single you cannot be trading every single fair value gap that prints. You cannot be trading every single order block that it prints. You cannot be, you know what I mean? There's always going to be multiple things popping up. You're going to see multiple fair value gaps. You're going to be seeing multiple order blocks, breaker blocks, whatever, right? A bunch of everything. That doesn't mean that you're going to trade everything in every single change in state of delivery. You know what I mean? I just hope it makes sense, right? So why that fail? Oh my God, hold on. I think I lost my internet connection now. So as I was saying, right here, right? We did have a change in state, but you see how slow price broke above, and then eventually you see how choppy it got, right? And eventually failed, and then up taking the low one more time, right? Now, after this one, you see price sweep. It took one candle to come back up, right? That also happens to be a much better rejection than this one, right? This one actually went a little lower, much lower, right? On that same 4 hour fair value gap, right? This one, we get a clean break with one candle, and we even created a fair value gap right there, right? So a lot stronger, right? So that means, again, you can take a long position right here, right? Stops, and then targeting probably the swing high, right? That, if that's what you want, right? So basically, right there, right? That's basically it. But I just hope it makes sense. What I'm trying to show here, that a change in the state of delivery will happen, right? A bunch of times, but doesn't mean that you can take all of them, right? Now notice that this low was protected. Yeah, price went a little lower to what? To do what? To sweep one more liquidity. So basically what was happening right here, it's another accumulation. You see price enter in a little range. It did another accumulation, right? Another manipulation, and then distribution to the upside, right? Now there are sometimes some type of entry models from ICT, right? For example, here, if you see this sweep, this accumulation started from here. Now notice that where this move starts, all the way from up here down to here. See, one, two, three, four, five candles, right? And then it takes two candles to break inside, to come back inside into the range. However, where's the change in the state? The change in the state would be very far, right? It's very far away in comparison to this change in the state. You see that it's very close. See what I mean? After the sweep, the change in the state is right here. But you see, after this sweep, the change in the state is right here because it's the series of candle. Right here, there was just one candle, or two basically, right? And break. But right here, it started from here, and they're all black candles. They're all the same candle colors. They're all bearish candles, right? So the change in the state is actually right there. So ICT has a type of entry model which is called inversion fair value gap. You can use the last bearish right here, the last bearish fair value gap. For some reason, it's not letting me play. Hold on. Yeah, I don't know. It's not letting me play it. But anyways, I think it's a problem with my internet. So, anyways, right? So this would be the change in the state of delivery, right? It's a little bit too far. But if you use this last fair value gap created, this is known as an inversion fair value gap. So as soon as that candle closes above, you can enter there, place the stop loss below this swing low, target highs, right? So that's another entry model, right? A different type of entry model. Oh, what happened here next, right? We had another accumulation, right? You had another manipulation and then distribution. Notice the distribution, it again, how many candles it took. It took one, two, three, four, five candles for the change in the state of delivery, right? To happen. However, the sweep, you just pay attention to the sweep as well. See how quick the sweep was? Sweep, retrace back up immediately. So we didn't even close below this low. So that's a strong sign that price does not want to go lower. It just did that little deep right there to manipulate this lows and then distribute to the upside. This is when you know, by the way, that the trend is actually bullish, right? You have a lot of possibilities here. The price, the market is actually bullish. So if you look at it, since I'm on the 2 minute time frame, I want you to see also this. I'm on the 2 minute, right? If I zoom in here, I don't know if you are able to do this. You're gonna have to have the premium version on TradingView, but it's gonna be something like this. You see, so we have a recent impulse here. Let's go from this to here. Actually, I'm gonna use this swing right here. This little move, boom, explosion here. Then price pulling back to where? It was pulling back to a fair value gap right here. I want to see what happened, or what would happen here if we got maybe an entry. So if I'm on the 2 minute time frame, I'm gonna have to go a lot, probably 30-second. Let's see if I can go to the 30-second chart and I get a clean entry model here. No, nothing clean. Let's see, 15-second chart. 15-second chart changes state. No. I never been into these lower time frames. I never trade these lower time frames, but let's see. Let's just have fun here. Oh my god, no. This looks way too low for me. Way too low. Let's say on the 30-minute, though, this was our change of state right here. So I want to wait for a candle to break above. See if we break to the upside. Boom, we got a closure above. So I can enter in here, place my stop loss here, and I can go for a 1 to 2, or I can go targeting different highs. Well, right there, it would be something like that, right? I'm using the fractal, right? I'm using the fractal model. I went from that 2-minute fair value gap that I spotted, and I'm going lower time frame. And why am I going all the way down here? Do you need? No, you don't need to go all the way down here. I'm just showing you that the time frames are almost the same, right? They pretty much repeat over and over. What is happening in higher time frame, it's happening in lower time frame as well. So the structure is pretty much the same, right? This is why they call it fractals. So, anyways, just hope it makes sense right there. You're gonna call that very little entry model. You see that little swing move. So let me see if I can get you now another example. Let's quickly jump into Euro USD. I'm on a 4-hour time frame, and you can see right here pretty much what's going on. Similar thing, right? We're having a sweep. Okay, there's a range, accumulation, manipulation, boom, price exploded to the upside right here. Pretty strong. We have a lot of momentum, right, going on. I like the way this thing is looking, right? The formation that we had right here was actually pretty nice. It was like from here, let's go from here. Come on. There. From that moment, that push right there was telling us for sure that, hey, price will most likely go to this highs now, right? You have an accumulation, manipulation, and distribute. So now, if you want, if you see that big explosion here to the upside, you can probably use again your premium discount thing, right? You can mark up your recent fair value gap. You can wait for price to come back, tap it. Let's see if it goes lower or not. Start going lower. There, created another high. So I have to move it higher. There we go. Let's see if we go all the way down to discount or not. However, remember, in order for me to execute, I have to go lower time frame. So let's see anyways. Boom, price is entering and it's tapping discount, right? Is that actually tapping discount? It's tapping the fair value gap right there. Now I go to lower time frame to look for my entry model, right? I have to look for that entry model. So a 15-minute time frame, am I getting a cool entry model right here right now? Can you see it? We have a recent sweep. Look at where the change of state would be, right? Pretty far away. I don't like that. So that means that if I want to stick to the 15, I would have to then try to trade the inversion fair value gap entry model, or I go lower time frame and go 5-minute or 1 minute. Already the 5-minute, where's the change in the state of delivery in the 5-minute time frame? It would be here. You see now I'm refining this thing. So also, by the way, you can see that we already broke that last bearish fair value gap. So we already have an inversion confirmation already. So I could execute right now if I wanted. Let's go to the 1 minute if I get something better. What's going on here on the 1 minute time frame? So 1 minute time frame, what do we have? We have one more sweep right here, right? Changing the state would be right here. So you see, if you want to refine it all the way down to the 1 minute, it's up to you. Not my favorite type of thing to do. Something like that. Then place the stop loss below. Again, the cool thing about the 1 minute is you can get massive sniper entries, but this is probably for later. When you already understand, you become already profitable. You already know what you're doing. You can do that. So anyway, something like that. We already understand that we are in discount. We have this recent push to the upside. We broke above, and we want to target that high. Sorry, I forgot. That's the high we want to target. So And there it goes. So from here, like you will find out that from here, you see, you have more entry models coming in. You see that it doesn't matter if you miss this move, because on the buy side of the curve, because this is what's going on, this is what's happening. This was price was in sell mode, so this is the sell side of the curve. Now you are in the buy side of the curve. If you know you're targeting these highs right here, now market from here you are looking only for buys. So your job is only to look for buys. So what's going to happen? Again, you're going to find more, again, more fractal models, more entry models. They're going to be very, very similar to what we've been talking about. You're going to find plenty accumulations, manipulation distribution. So you have an accumulation, manipulation one more time, and then price distributes, changing the state of delivery. So you could have made, you see your entry now in this case right there if you missed it. If you missed this one, could have entered there anyways. Excuse me. And then from there, target the highs. And then I'm sure that if you patiently wait, you're probably going to get more entry models, because the price is always going to be doing that. It's going to accumulate. It's going to have an accumulation, manipulation, distribution. Let's go higher time from here to move it a little quicker. See, it's pulling back. It's pulling back to where? Probably to a fair value gap, right? Higher time frame. Now you're going to have your fair value gap right there. Price is respecting the fair value gap. Manipulation, see what it did? But you see, it was clear to see the manipulation happening. Nasty move right there before it went up. Manipulation, changes the state. Notice the fair value gap. You could have taken this fair value gap right there. Right? If I go lower time from here, 5 minutes, it is probably another accumulation, manipulation, distribution. I see there's a manipulation here. There's always some lows being swept, you see? So accumulation, manipulates, and then boom, distributes again. Over and over again. This repeats over and over again. Doesn't matter where you are. Are you trading currency pairs? You're trading futures, Nasdaq, gold, cryptos, right? Some of them will be more manipulated. Some of them probably will be less manipulated, but at the end of the day, they all the time they do the same. They end up doing the same. So I hope it makes sense. If you have any questions, guys, any doubts, any concern, please let me know. I want to hear from you in the comment section, guys. And make sure to subscribe, follow us on Telegram and on Discord as well. If you're interested in joining my community, go ahead and visit teamprofitsenglish.com. I'm offering right now a lifetime mentorship. So for a one-time payment, you're part of my team forever. You can see me trade live every week by New York time, New York session, and New York Stock Exchange opening. I trade especially indices, Nasdaq right here, and I use ICT concepts. So thank you guys for watching, and I will see you in the next video. Take it easy.